Let's speak about Opendoor, aka Ipob, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove that fact. And today we're speaking about a company that I have been getting asked about constantly for months now. It's a company that I never put too much time and effort in because they went on this fantastic run as soon as this merger was announced. And I had only ever done a small amount of research into this company, and I thought when they were approaching those highs, they were overvalued. However, over the last week and a half or so, they've dropped nearly 1/3 in value, and in my opinion, they are looking a lot more attractive at these prices. And also, Ark Invest went ahead and picked up 280,000 shares in this company yesterday. That is quite a few shares. Not only that, but that means they now own just shy of 2 million shares total. Ark was also buying this company when they were above $26 per share, my friends. So that did most certainly pique my attention. It also is innovation, and you guys know on this channel, we love innovation. So this is my first time speaking about the company, so we're going to go through the basics. Of course, we're going to have a look at recent price action. We're going to have a little bit of a look at what Ark is doing as of right now. We'll have a look at the website and the investor presentation. That's where I always really like to start things off when I'm looking into a new company. And then I also want to speak about a couple of articles issued by a man named Mike Delperet. I probably butchered that name, but you will see why I want to go into these later on. Shout out to a Discord member for sending me this guy. This is some awesome information. And so I'm going to give you guys both sides of the story. I've said many times on the channel, in investor presentations, companies are really trying to big themselves up. They want to make you invest. So it is nice to get two sides of the story to an extent and not take all of your information directly from the company. Right before we get into the video, can I please ask you to hit that juicy like button? You guys have been waiting for this video for a while. If you're new around here, could I please ask you to hit that juicy red subscribe button? We are about 1,100 subs away from 50,000. When we hit that, that is going to blow my mind, guys. And drop me a comment down below. I know a lot of you guys are already in this stock. I want to know how you feel about current prices. With that being said, let's get into the video, baby. So a lot of you guys probably know who these are at this stage, okay? Ticker symbol is IPOB. We are going to be merging with Opendoor, okay? This is Chamet. I don't know how to pronounce his name. You guys know who this guy is. Pretty cool fact. His first SPAC merged with Richard Branson's Virgin Galactic. IPOB is his second SPAC, along with long-term investing partner Ian Osborne. And they now have 4 SPACs altogether. But today we're just focusing on IPOB. But a lot of people know this guy's name, have a lot of respect for him at this stage. So you can see that we're currently trading just shy of $18 a share. And when this news came out, you know, we very quickly went up on this massive run to $26 a share. So they were up about 140% or so. We peaked out the 14th of October, as a lot of SPACs and a lot of stocks in general did, and since then it's been this downward move, very similar to what again we've seen with a lot of SPACs and growth stocks in general, and they've lost about 1/3 of their value. We've seen that with so many companies as of late. Now, as I said, this is one company I somewhat wrote off in the past because I just saw nothing but upwards movement and I did not see a good entry point. Whereas now we're getting to levels where I could see myself investing in this company. So some absolute basics before we get into some of the more juicy information. This is the way they say it themselves. Unlock home ownership for millions of Americans. Buy, sell, and move at the tap of a button. It's making either buying or selling a home easier than it ever has been. It's innovation. It's disruptive innovation. I believe that's exactly why Ark are getting involved. Now here we have Ark's buying history of IPOB. We can see that literally yesterday they went ahead and they picked up about 280,000 shares at $17.98 a share. Now we can see the very first time they bought was the 29th of September, and they bought just shy of 200,000 shares at $18.75 a share, and they bought the whole way up as much as $26.48 a share, my friends. So this is pretty much the cheapest they ever bought, except for one day right down here. So clear to see Ark must have a fair bit of confidence in this company, considering they were willing to buy at the all-time highs, and they've bought the whole way back down as well, and now they're buying heavily. I mean, that 280,000 shares in one day is considerable even for Ark. And last time we saw them buy heavily was here, the 6th of October. At $16.35 a share, they picked up, what, 1.1 million shares in the company. So the last time they went heavy, it went on a beautiful run, basically. Now let's just get straight into the investor presentation. Let's get into what I think about this company. So we are the innovator and market leader, okay? Some key metrics right here. They're in 21 markets. 80,000 homeowners served and $10 billion of homes sold. So revenue growth has been absolutely fantastic, and later on in this presentation you'll see that it's only gotten better this year. But I mean, 2017 we were looking at 700 million in revenue, 2018 1.8 billion, 2019 4.7 billion, some absolutely insane growth going on, some beautiful compound annual growth. Homes sold in 2019, Pretty much 18,800, 4.4 times larger than the next closest competitor, my friend. So these guys, the innovators and the market leaders, something I absolutely love to see. So some investment highlights just to get an idea of what we're looking at. It's a massive fragmented market. US real estate industry is ripe for disruption. I think that should go without saying. This has been something that's been in the works for years and years now, but it really is starting to come together, and I think it will only be accelerated by the Roni. Me personally, I'm looking into buying a house relatively soon. It's something I've wanted to do for a considerable period of time. I would much rather be able to do it from the comfort of my phone than have to go through all of the hassle that comes with buying a house. Superior consumer experience, okay? That's exactly what I was just speaking about. They're a market leader with low cost transaction platform. And this is one of the most exciting and key points that we're going to spend a good bit of time speaking about later on why this could be a good and it could also potentially be a bad thing. Rapid growth and scale, as we already saw. Strong unit economics, okay, so proven replicable margins across multiple markets. Again, we'll get into that. And significant upside ahead, which we've already seen by the revenue growth. So they say right here, this is the largest undisrupted market in the US, okay? So it's a massive market. 68% of Americans are homeowners, and there's 5 million homes sold annually. Now the process is complex, uncertain, time consuming and offline, and I have to say this is one of the biggest turn-offs when it comes to me wanting to get into real estate, or whether it's buying my own house or buying a property to let. It just takes so long, there's so much back and forth, it's boring, it's time consuming, and a lot of the time it will come to nothing, and it is just completely and utterly wasted time. So today 89% of buyers and sellers use an agent, and this is their experience. So you decide to move, you find an agent, repair and prep, list it for sale, host several open houses, receive an offer, buyer inspection, negotiation, the list goes on, and at the end of the day 20% of deals fall through. And there is cost of as much as 12% of the transaction, okay? Keep that number in mind because we will go through how much it will cost to use Opendoor going forwards and how much it costs right now in certain states. So you can go onto this website, receive an offer and sell on your own time, and you get an online cash offer, flexible close date and digital closing. Simple. This is what we need. No experience to search, visit and buy thousands of homes. I mean, go on to Google Maps, see where all the houses are, see what the asking prices are, view them on your phone. It's awesome. I've gone to look at some properties before, and let me tell you, it isn't fun at all. You ring up the agent, you have to figure out a time that works for both of you. In general, it's going to take you a few days, if not longer, to actually get into that property. Maybe then you'll have to go back with an architect. It is such a drawn out process. So it offers greater simplicity, certainty, speed and safety, which is what I love to see. So Opendoor in comparison to a traditional sale, okay, it's simple. I think that goes without saying. It's certain, there's a guaranteed close on your timeline, it's fast and it's safe. So as of right now, there's about 80% of people browsing for a quote and 20% real sellers. That's decent. So there was a high conversion, 34% of 2019 real seller conversion. We're speaking about houses here, guys. And 90% sell direct to Opendoor without agents. So real seller conversion versus fees. Even at 10% fees, conversion is 23%. But at 6% fees, conversion is 44+%. So cost advantage, applying technology to reduce costs, okay? We're 12 times more efficient than a traditional agent. And yes, I do believe agents are very inefficient in general, in all honesty. And I don't necessarily think it's their fault, I just think it's a flawed system. It just takes so long. So 50% reduction of spend per home over the last 2 years. 40% plus bulk pricing discounts on home materials. Beautiful. 10,000 plus subcontractors on our platform. They have everything. So their first 6 markets reached 2.7 billion run rate revenue in the first quarter of 2020. Now, in case you don't know what a run rate is, okay, if we come over to Investopedia, the run rate refers to the financial performance of a company based on using current financial information as a predictor of future performance. So the run rate assumes that current conditions will continue. So looking at 2.7 billion judging off the first quarter of 2020 on their first 6 markets. But as of right now, they're in 21 markets and they're just scratching the surface. And we can see here that they have a $5 billion first quarter 20 run rate in revenue. So that revenue has gone up again. We're in quite weird conditions. I think we all know there's not an awful lot of people buying houses right now. So if they can keep that revenue up there, that's looking good for the future. And this is a good time to say that I think any sort of company like this should at least be a medium to long-term investment. That's the way I will be looking at it at least. But I do think it's a nice play as of right now. So they have about a 2% market share at the moment as well. So their current playbook takes them to a $50 billion in revenue, which considering where they're at right now would be absolutely huge. And that's assuming 4% market share in 100 markets. And there is a US market potential of $1.3 trillion. And of course, that is only going to go up over time. I think we all know that houses are in general assets that appreciate in value when given decades and decades to do so. So of course that market is going to go up massively as the years go on. Look at how much harder it is to get a house now than it was 50 years ago. The cost of houses has absolutely destroyed inflation or anything else. So obviously right now, it's early stages of the digital transformation in real estate. That is why this is, investing in disruptive innovation. If you go down right here, you'll see that the percentage of real estate that is done online is less than 1%. So there is a whole lot of potential here, my friends, and I do think, I've said this so many times on the channel, the majority of the world is going to move online over the next years to come. Now, their financial overview, okay? We have proven positive unit economics. So the first quarter 2020 margin performance, my friends, okay? We're looking at a 7.3% adjusted gross margin. Now, selling costs of 2.6%, which we're going to speak about very shortly when we finish this investor presentation. That is very low and has been getting lower and lower. They are the two most important things I want us to speak about, okay? Don't need to make it more complicated than that right now. That's our adjusted gross margin. That's our selling costs. So the vast majority of our markets are CM positive. That just means contribution margin positive. So Phoenix, as of right now, is their biggest market, and we're looking at $11,000 per home. And their total co-contribution margin is $8,000 per home. 90% of markets are CM positive. And obviously the goal is going to have that at 100%. So demonstrated success in adding high margin services. So again, this is something we're going to spend a bit of time on after this presentation. So make sure to stick around for that, baby. First proof point with title and escrow. So again, some of you guys might not even know what this means. Titles offer protections against accidents and malicious acts that may negatively impact the interest of the buyer. An escrow company holds assets and money involved in a transaction as a neutral third party and uphold the contractual terms for both sides. So very high margin service right here. I mean, look at this, baby. And I remember earlier I was speaking about the compound annual growth rates. Look at this. Homes sold, okay? Compound annual growth rate of 145%. First quarter 20 run rate, it slows down quite considerably. I'm okay with that. We see the same with the revenue. 2017, 2018, 2019 have been incredible. 2020 could be a little bit slower, but if we're still beating 2019 under current conditions, I'm going to be fine with that. And the adjusted EBITDA margin at negative 2.3%, that's much better than it was 2019. So we can see that they do expect 2021 to be better here, but 2022, 2023 is when growth will really start happening again. And that's why earlier on in the video I said I would see this as a medium to long-term investment. And I agree with these numbers. I don't think it has to go crazy next year, and I don't think it will. But I don't think the large majority of companies or even broader markets will either. So that's pretty much what I want to go through from the investor presentation. Now, obviously in an investor presentation, it's all good, it's all golden, it's all happy days. So we've seen that Ark is buying. Let's get another opinion from somebody who knows a whole lot more about this than me or you. A real estate tech scholar at the University of Colorado, Boulder. We're looking at a guy called Mike Delpret. He's a global real estate tech strategist and a scholar in residence at the University of Colorado. He's a former tech entrepreneur, CEO, and head of corporate development with broad expertise in online real estate tech and a passion for growing new business. So, the guy knows his stuff. First thing I want to speak about is this: Opendoor's path to profitability, attaching title and mortgage. We just spoke about these things, okay? So he says himself here, Opendoor's path to profitability is paved with uncertainty. A key assumption for long-term success is the ability to attach adjacent services to the transaction, such as title, insurance, and mortgage. Now, obviously, I'm not going to bring you guys through his video. You can feel free to do so if you want. So remember, we spoke about this briefly, that high margin service. He goes on to say that in the investor presentation, the Opendoor correlates early success with attaching title and escrow services to long-term margin improvement and profitability. The challenge is that title and escrow are the easiest ancillary services to attach by a wide margin, and success in a few markets doesn't mean all adjacent services will be nearly this easy, my friends. So he did this himself. He said they added one easy high margin service. So will they be able to do more things like this going forward? That is the question right now. Title insurance is a complicated business and regulations vary by state, so it may be different in every single state, and if they want to take over that market, it could lead to difficulties. So they are seeing early success, but it's taken years and an acquisition of a traditional title company to get to this stage. So that's what he says here. Just because they've seen early success with title insurance, the easiest adjacent service to attach, doesn't mean it will find similar success with more difficult services such as mortgage. So that's something worth understanding from the beginning, but I don't necessarily think it's a bad thing. They have found success with this one, and hopefully they will find success with more adjacent services. Then he has this other one here from October 19th, the iBuyer war on real estate commissions. So since the beginning, an iBuyer's biggest expense has been agent commissions, okay? Specifically the buyer agent fee of around 3% when a home is resold. Remember I brought you through this selling costs? This fee is highlighted as selling costs in Opendoor's investor presentation. So like many good businesses, Opendoor has attacked this cost with vigor and offer 1% savings when buying with a partner agent. Opendoor isn't shy about it. The same investor presentation lays out a game plan to profitability, which includes a further 0.6% cost optimization on each home sold. So in other words, their target for selling costs is 2%. And you can see they have reduced buyer agent commission in Phoenix, its largest market, over the past 18 months. We were at 3%, we brought it down to 2.5%, now we could be looking at 2%. So you can see they stopped offering 3% commissions in favor of an even lower 2.25% starting in February 2020, well below Phoenix average buyer agent commission of 2.8%. Zillow, another company you guys may be aware of. I'm going to have to do a lot more research into these guys soon as well. But you can see Zillow has the same financial incentive and have also been offering lower commissions over time in its biggest markets. How low can they go? So is this good for Opendoor or good for consumers? Well, it's difficult for a consumer to negotiate and see direct financial benefit from a lower buyer agent commission. It's very easy for Opendoor or Zillow. The iBuyers have scale, financial muscle, and incentive to challenge the status quo. So it looks like this is good for consumers and Opendoor. So it says here, the cost savings are not ending up in consumers' pockets yet, but Opendoor in particular appears to be indirectly passing some savings on to consumers. In September, it dropped its average service fee to just 5% and has repeatedly stated its intent to further reduce fees. All in all, guys, I really do like the look of these guys. Now, this is disruptive innovation, and I don't think there is any disruptive innovation out there that doesn't come with its fair share of risk. It looks exciting to me. Even at current prices, at current valuations, it looks quite nice to me. As well, pro forma ownership, it's looking like about 80% of existing Opendoor shareholders will own the company after, with only 9.5% of PIPE, 6.6% IPOB shareholders, 3% management awards, and 1.6% sponsors, which is quite nice to see. And the completion of the transaction is expected by the fourth quarter of 2020. They have over $1.5 billion of pro forma cash on the balance sheet, and we have an enterprise value of about $4.8 billion. So technically, as of right now, we may be ever so slightly overvalued, but it's tough to tell. In the short term, I think absolutely anything can happen here, as I think absolutely anything can happen with pretty much any company in the market right now because of the stimulus and because of elections in particular, and obviously the Roni as well, the worldwide pandemic. But from a long-term point of view, I think we could be looking at an attractive price point. Now, I will make it very clear, I have not bought into this company yet, so I don't have a position. I am considering doing so, whether that ends up being today, next week, or in 2 weeks' time. If you do want to know anytime I buy or sell any company, please hit the first link in the description. You can sign up to my Patreon. You'll get full access to my private Discord group, baby. But really, guys, that is where I stand on Opendoor as of right now. So that's my first video on these guys. You know, when I make my first video on a company, I try to keep things fairly basic, just get a good understanding of the company and where they stand. I may well end up making a follow-up video in another week or two when I've done some more research into, you know, the broader market, the competitors a little bit more, to see how I really feel. Right off the bat though, I'm liking the look of these guys. So boom, baby, there we are. Finally, I made a video on Opendoor, and I do hope you guys enjoyed. And if you have watched this video all the way till the end, you, my friend, are a true legend, and I really do appreciate you being here. You just watching the video till the end helps me and the algorithm so much, so thank you. If you did enjoy, maybe you took some value and entertainment, please consider hitting that like button, because again, that helps me out so much. Drop me a comment down below, let me know what you think of the video, let me know what you think of the company, and please, ultimately, if you are new around here, hit that juicy red subscribe button and join the family. We're so close to 50,000. Very interesting company, but again, if you've watched my last few videos, you know I am pretty much at 60% cash. I have not been buying much for the last month or so because of the election. I haven't been selling anything either, but I do have to start unloading some of this cash. I mean, it's burning a hole in my pocket. It's not doing very much for me, and I do start to see some more value in the market as of late. But anyway, my friends, thank you so much for watching today's video. I hope you all have an absolutely fantastic day. I will see you for another one very soon. Peace.